Hello, everyone. Welcome back to the channel. Matt with Green Barb Trading, and welcome back to another weekly watch list video. There's a lot of research that has gone into this video. There is also a massive week that we're looking at this coming week. You have FOMC with the rate decision on Wednesday. You have PCE on Friday. And then you have every stock that means something to the overall index, the weighting of the overall index, having their earnings this week. So you have half of the Dow 30 stocks reporting this coming week. Just a massive week. So let's get right into it. Gonna start right here with the earnings. And like I said, jam-packed week of earnings. It's almost impossible to predict which way these stocks are going to go. I'm going to go over a couple of charts later in the video, but I'm not going to be able to predict which way they're going to go. We can only assume from what we're hearing about earnings so far that a lot of these stocks might have trouble in the ad revenue space. And that's companies like Alphabet, Meta, these types of stocks. A lot of these stocks can have some trouble this week. And, Amazon, we're just going to have to wait and see what they say because it's impossible to predict. And I don't trade through earnings for that reason. You see some outsized moves, especially last earnings season. Nobody wants to get caught on the downside of something like that. And if you do trade through earnings, just realize that you're taking a gamble. It's basically a 50-50. And if you're trading options, remember that IV crush can really hurt you if you're taking far out of the money thinking, okay, I'm going to be able to collect on this the following day. Well, with that high elevated volatility with the IV, it's just going to be a crushing blow to you. So, just keep all that in mind. Like I said, jam-packed week of earnings. So let's go over to our economic calendar for the week. And this is what I was talking about. On Wednesday, you have the Fed funds target rate. 75 basis points is already baked in. That's already in the market. At 2:30, that's when Powell is going to have his press conference. And that's where he will most likely give more color about the overall economy. There's no meeting next month. So we're going to have next month off, basically. There'll be some speaking coming out. But, there's no rate movement next month. So maybe he's going to speak about the September raise and what they're looking at. So that moves markets like you would not believe. And that's going to be at 2:30. So you're going to get a move at 2, and then you're going to get a move at 2:30. Sometimes these moves are totally different. It'll go up and then come back down. So just keep that in mind. It's a very difficult time to trade. And then on Friday, like I said, PCE, core PCE, this is something that the Fed looks at when determining their monetary policy. All right, so that's this week's economic data. You're going to just want that Wednesday marked off on your calendar. If you're trading around those times, keep in mind it could be very choppy. So that's the economic calendar. And then coming over to FinViz to see what has been a better performer and what has not been a very good performer. So on the 1 week, the only thing in the red really is communication services, and that is due to what happened on Friday. So after Snap had their earnings on Thursday, it scared a lot of these ad revenue companies. Like I had said before, like the Metas, the Googles, these stocks really took it on the chin on Friday and went down pretty decently. The whole tech index went down a lot on Friday. So just keep that in mind. Now, if we go over here to show you guys really quick what makes up the communication ETF, and we just come in here and click on it. This is in our Discord that we have posted every day. Google makes up a lot of it. Verizon went down a lot on Friday. A lot of these stocks, had a really tough time on Friday. So, keep that in mind. It still has FB, but this is Meta, went down a lot on Friday. So that's why the 1 day relative performance on that looked like this, minus 4.35%. Not very good at all. So investors were dumping shares ahead of earnings just in case some really bad news came out, and those stocks we saw really big moves to the downside. Now, nobody can tell for sure what's going to happen, like I said, but that is just what's been going on. And technology and in general, the market did have a nice week. And I'll get to showing our compass, which is the SPY right now. This is the weekly chart. I like to look at these indexes on a bigger time frame. Gives me a better picture of what I'm looking at. Last week, we had said we have about a month straight of consolidation. We had this candle that we loved in our last weekly watch list video. This is a weekly bullish hammer candle, saw continuation and broke out of that range, broke out of the 50 moving day. So really a nice move. Now what you have is sort of a doji candle. That means a candle of indecision. Even though the market was up, what you can start to see now, and a lot depends on the earnings, but you could either see consolidation or another move. Very tough to tell, like I said, around earnings season. To predict market direction is almost impossible. So all we can do is look at what we see. We had that bullish hammer. We knew continuation was going to come out of that. We saw it. Now you're going into, like I said, those heavy duty earnings. So it's going to be tough to figure that one out. We'll have to just wait and see how these companies show their earnings. Now, after that breakout, this is the daily chart now. After the breakout, we almost had gap fill up to 401.50, and then we kind of pulled back. So we're still over the 50 moving average, which is very good. And the potential of consolidating a bit before Wednesday or some of these earnings happen is possible. I could see range bound until those big earnings and the Fed comes out on Wednesday. And then sometimes you'll get moves Thursday and Friday as that, news kind of gets digested by market participants. So right now we broke out, consolidation, and that's where we stand right now. We do have room up to the weekly level of 410 if things go really well, and then you're going to run into our overhead supply here, which is why I have that weekly level marked off at 410. Going back to the weekly chart, the 20 EMA on the weekly has been support in all of 2020, 2021, really acted as great support, and then it started acting as resistance. So if we're thinking from a historical pattern point of view here, then we're going to see some rejections up here at the 406, 410 area. So upside sort of limited, but you know, anything can happen. Like I said, earnings season and the FOMC. But that's just right here what we have seen in the past. So that 20 EMA on the weekly, support, and now resistance into 2022. Going over to the Qs now. Let me see here. On the Qs daily chart, let's start with that one. On the Qs daily chart, I'm going to show you guys something that I find pretty interesting. And I'm just going to zoom in the chart here. The 50-day moving average and the 20 EMA crossed right here. Okay. Right here before the market pulled back, the 20 EMA crossed over the 50. The last time the 20 EMA crossed over the 50 is when we saw that March rally come to an end. Not only that, you have the RSI right up here at the same levels as it was right here. So keep that in mind. This is on the QQQ. It came into some heavy resistance and pulled on back. All right. RSI, same point as right here before we pulled on back. 20 EMA, crossing over the 50, crossing over the 50 right here, pulled on back. So these are just patterns that I notice. History does not always have to repeat itself, although it often does. So right here, you have resistance. You have a weekly level that it resisted at perfectly. And then you have some of these other things like the RSI and the 20 over the 50, where we've seen some pullback. So going into this week with all the tech-heavy earnings that make up this entire, huge weightings on the QQQ, if those earnings are bad, you're going to see this thing plummet. And where can it go? It depends really on how bad, if it is bad, that guidance is and what they see in their conference calls. So we'll just have to wait and see what that shows. That's the QQQ on the daily. If we go out to the weekly on the QQQ, you can see it's got that same candle of indecision here for this past trading week. You had a beautiful bullish hammer and then a breakout of that area, but right into our weekly level, and then again the 20 EMA. So that's just, looking at this from a bigger point of view, and then realizing that this week again has so many earnings. Coming back to the daily chart, I just want to show you guys something. So a distribution day happened on Friday. That's when the volume for a day is higher than the previous day on a sell-off of 0.2% or more. A distribution day is not loved by market participants. That means that big money is coming out. So that happened on the QQQ, that distribution day. Also happened on the SPY. We had a distribution day. Higher volume than the day before. Big red day, way more than 0.2%, and that's a distribution day. So this is definitely a market that is still trying to find its way. It is nice that it's over the 50-day moving average. It is nice that the QQQ is over the 50 moving average. It had to get there eventually because the 50 moving average just kept coming down, 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 down. Eventually, it was going to break it. Had trouble here, but then broke it last week. So that's good. It's good that it's over that. But like I said, distribution day, multiple bearish things lining up, and then you have earnings that might not be so great. So just coming into this week, I'm a little bit more bearish, but I don't like to go in with that sentiment that bias when I'm trading. I just want to trade what's in front of me. I can easily flip if I start to see some nice action, as we have seen some not great earnings reports, like Tesla wasn't great, but it broke out. It had a very nice response. So, meaning, is all that bad news already baked in? It's possible. And then let's look at the Dow Jones. This basically just filled the gap. And we called this last week. If we break over here, break the 50, then you have gap fill potential. And that's basically what we saw. And then we pulled on back, another higher volume day on Friday on a pullback, and that was another distribution day. All right. So sort of the opposite of what happened the week before, where we had a Friday that was really good. This past week, we had a Friday that wasn't so good. So that's the Dow Jones. We went over the Qs. We went over the SPY. Let's take a look at some trades, some stocks that actually worked out very well. I'll show you guys here in just 1 second in our Discord our last picks for the week. Where are we? Right here is Starbucks. This name is holding up well. This was from our last week. Definitely seems to have based out, forming a nice base. Having trouble getting over that 80 resistance level. This is one of the few stocks holding over its 50 moving average. I still like this long, but wait for confirmation. What does that mean? Confirmation means that you get that breakout, and then you could buy on pullbacks. And that's what happened on Starbucks. Starbucks was forming a nice base. It had a double bottom. It broke a trend line. It retested a trend line. It broke the 50. It broke the 20, came back up to resistance, hammered it, hammered it, hammered it, hammered it. When something does that many times, well, there's a good chance that that stock can break it. And on elevated volume, this is what you like to see. Broke through that level. So that gave us a good trade. Where do we go from here? Who knows? We have earnings coming up in 2 weeks. So it's tough to say, but that was the nice trade to get right here. So that trade worked out. That was Starbucks. Apple going into earnings. I'll just show you guys here. A lot of people have this trend line drawn out. So you have a trend line here that is now acting as resistance. It's still in our red box for, that overhead supply and that resistance that we were going to see. Like I said, though, it's over the 50. It's over the 20. You have the 200 here up at 158, but you have earnings coming up. So at this point, anything can happen. It's a rejection here, though, at this trend line. There is a possibility, if their earnings are not good, that you can see far more downside here. And if this goes down, the whole market's going to go down. If this goes up, then the whole market's going to go up. Apple is the biggest stock for this market. This one and Microsoft, also a very big weighting in the overall index. Microsoft is still in this downtrend, and right here on Friday closed just at the 50 and the 20 EMA. Earnings this week. Anything can happen with this stock. Can't predict earnings. I don't know how many times during this video I have said that, but it is the truth. I'm not even going to pretend like we can figure out which way this is going. Now, Google. This one I'm bearish on, very bearish on this. I feel like the ad revenue that Google is going to show is going to look a lot worse. So you had the year 2021, you had the year 2022, all on really elevated, looking down here, elevated earnings. Before the pandemic, you had, $10 a share, even less than that. And then you had the pandemic and everybody and their mother was on Google. Well, now it's starting to come back down. Now, if that comes back down to where 2021 started, you have the weekly level there of 95. It's also a gap fill for this spot. So if we break, and if we break 100, this thing's most likely coming down to 95. But like I said, we're just going to have to wait and hear what they have to say going forward. A lot of consolidation. Looking at this on the weekly chart, a ton of consolidation. A lot of charts look like this. So there's going to be a big move one way or the other. When you have consolidation like this, it tends to move either to the upside or the downside. So just keep that in mind. AMD is another one that has a technical setup. This has a trend line, a downtrend, resistance, and it's now back under the 50 moving average. Has earnings coming up, not this week, but next. And this is in just a down, lower highs, lower lows pattern. Could reject here like we're seeing at this trend line and then come down and retest these lower levels. So I would be short AMD just by looking at the chart. Definitely in that downtrend type of action. So AMD, definitely a short looking at this. And then we have MRNA. MRNA is setting up for a cup with handle. Okay, a cup and handle is setting up right here. And you have earnings coming up not this week, but next. This one had a nice bottoming pattern, came up, and now is right over this 20 EMA, looking for it to either pop or drop. But this is a cup with a nice handle forming here. So we'll just have to see what earnings say and, going forward, which, shots they're going to be giving in the fall. Do they have Omicron shots? They want to make flu shots. This company is definitely one that was extremely attractive down here. And we've had this on multiple weekly watch list videos, but now we have a pattern. We got that cup, we got that handle, and now I expect some more upside potential to mRNA. So that's that. Historically, the markets in general are coming into some weaker months as a lot of traders take off, go on vacation. So, you can see a lot of volatility, but it's just going to be a little bit choppy trading going forward. So I hope you guys enjoyed this weekly watch list video. Hit the thumbs up, and I will see you back tomorrow, Monday, with another video. Take care, guys.